All right, welcome out to today's advisory report. It is July 23rd, 2026, Thursday. Tough day in the market today. Google and Tesla reported earnings yesterday after the market close, and a report on more spending on CapEx, and the market is a little worried and cautious of overspending. So let's go ahead and see what happened. Either way, had a negative effect, even though some of the reports were beats on what was thought might have been their earnings and their revenues, but negative effects on the market. Today, we are in an uncertain, neutral environment. The intermediate trend is bullish. We're back to bearish on the short-term trend. We just kind of keep bouncing up and down. We had some, of course, the pulled down our strategies a little bit. The thing is typically CapEx spending has a positive result long term. So we'll just have to kind of see how that transpires. Let's go ahead and jump over to the intermediate trend. And we are looking at the S&P 500. We will take a look at the MAG 7. We'll look at Tesla. We'll look at Google to kind of see how that affected the market. I mean, taking a step back and looking at the intermediate trend, we're bullish and everything looks fine intermediate trend wise. We're just struggling a little bit here in the chop in the short term. If we're looking at the short term trend, you can see a gap down today in the market. We opened up right about this level, pushed lower, actually pushed up, pushed lower, and then pushed back. So you can see we're kind of below our levels of what we consider offensive, defensive levels in the short term. So we did play a little bit more defense today in both the ultra aggressive and the aggressive portfolios or the strategies. And so we just don't want to get too defensive here because this could just snap right back. So we are a little bit defensive, but not overly defensive. Let's look at the daily just to kind of see what I was, or the entered market, I guess, to see what I was talking about. We'll look down here at the 5-minute trend. Here we see the gap down. We see a little bit of a push forward or push up, and then selling for all the way to midday, a rebound, and then a steady trim down, and then at the end of the day, a push back up. So after hours, we are up a little bit from where we closed at. We'll just have to see how this kind of pans out. Once again, I don't think we're in an overall bad position. If we go back to the short term, it's just going sideways. It's just chopping around. We don't want to do a whole lot during a period like this. Really where I want to catch it is after it's resolved itself, move back up and kind of get heavy in this zone. So if we go sideways and turn back up, pressing the gas. Honestly, if we start breaking down further from here, we'll probably play a little bit more defense, but while we're in this zone, we just kind of want to be mindful of not getting chopped up and down. Let's go ahead and look at some of the positions on how they fared inside of our ultra aggressive portfolio. Eli Lilly, a good day today, up almost 2%. STX that we took on yesterday had some follow through buying, but then got pushed back down. XBI was up for the day. This is biotech. Just tested the lows and then kind of came back. So still forming maybe the bottom of that turn back up. Goldman Sachs, disappointing, but still in the uptrend. You can see right here, today's range was basically just where we were at a couple days ago. AMD trading within basically the day before. We bought it here, so we're just kind of in that range, so it doesn't look too bad. CrowdStrike, we did lower some of our exposure on CrowdStrike, even though it's at a spot where it could bounce. You're just kind of holding on to something that just keeps going down, down, down. We do still have a significant position. Before it was oversized. Now it's just kind of a normal position for us. And we do have UPro holding on to this. This was kind of the thing that might have hurt us a little bit. We'll see if this S&P 500 leverage wants to regain control, go back up to the upside. Let's go ahead and look at Tesla really quick, down 14%-ish on the day. This really dragged the indices down. I mean, just getting smashed today. So, you have something like this that happens to a bigger name. Typically, you'll see that transpire across all of the other indices. So let's go ahead and look at Google. And here's that gap down on Google. So both of those reported earnings after the market closed yesterday. Today they felt the effects. And so let's look at the MAGs. Overall, the MAGs did get pounded a bit. Here's the MAG 7. So you can kind of see down 4.63% on the MAG 7. But let's look at the XMAG, which is the S&P 500 minus those. So not a bad day for the rest of the stocks. In fact, this looks very, very constructive. So we're kind of in the in-between zone, right? We have some of the big names pulling the indices down, but under the hood, things are still looking good. So once again, that's creating some chop, and it's creating us to be a little bit cautious, but we don't want to be overly cautious. That's what I got for you today. Take care. Have a wonderful afternoon.